Hey, what's up everyone? Welcome back to the channel. So today I figured what I would do is attempt to build in a trading algorithm. Um, it's not gonna be my specific algorithm, but I figured what I could probably do is try to focus on the things that I learned over the last year or so in building my algorithm. The things that I deem to be important, right? I mean, they're important to me, they may not be important to you. um, and obviously what works for me may not work for you, because one of the main things is that you need to focus on something that suits your style and your personality, right? And your outlook and approach to the markets. And if you're not at the stage that you have an outlook on the market, or you know what you're doing, then you need to figure that out, right? You need to figure out how you envision yourself trading, what life you see for yourself, how much time do you want to spend on the charts. There's so much questions you need to ask yourself before pinpointing your trading style and then building an algorithm that suits it, right? For me personally, I wanted to spend least amount of time on the charts as possible. Scalping on the lower time frames doesn't really appeal to me, but the higher time frames do, right? I tend to like the slower paced approach, very relaxed approach to trading. Therefore, only having to check the charts a couple times a day, maybe once a day if I'm lucky, right? And I mean, look, I didn't come up with any of this on my own. I didn't invent algorithmic trading. And there are tons of resources out there, tons and tons and tons of resources, books, blogs, YouTube videos. The list goes on. And if you're interested in it, I recommend it that you go out there and you start digging around, start looking around. And one of the best places, at least I can recommend right now, is a YouTube channel called No Nonsense Forex. That it's run by a guy called VP. He's a professional trader, has been doing it for a while. He also runs a blog. I think he's kind of done with the majority of his course content on YouTube, but I found it to be phenomenal, man. It really appealed to me. It kind of opened my eyes to a different side of the trading world. And if I ever meet him, I'll be forever grateful. So yeah, I'll leave a link to his channel below if you're interested. I mean, it's a very long, very long, drawn out. I say long and drawn out. It's not really drawn out, but it's a very long list of YouTube videos that you'd have to go through to really get to grips with how he approaches the market. But if you have the time and you're eager, I highly recommend it. Anyway, so as I say, I'll leave that link in the description below. Second channel, if you're into indicators and seeing how certain indicators perform against a certain amount of tests and stuff, another channel I highly recommend is Trading Rush YouTube channel. That was a pretty decent channel for me as well. It came kind of later in my journey, but still it was very interesting to see how different indicators perform in different market environments and stuff. So I'll leave a link to that channel as well below. So yeah, those two channels really good if you're into that kind of stuff. So anyway, off to the charts, right? So I'm here on the Chef JPY pair. This is one of my favorite pairs to trade, right? Purely because if you look at it, it just tends to trend a lot, right? You get pretty decent moves. Not all the time, but you get pretty nice moves a lot of the time, right? So what I wanted to focus on when trading this particular pair, and in my trading in general, right, in my trading style, is that I wanted to focus on catching trends, right? So you could see here we have, if I just zoom out actually, you could see here that we have this trend moving up, this kind of reversal, then it moved down, move up, move down, move up, and then here it's kind of going sideways, right? This area here, I hate to trade in this sort of environment. So as best as possible, I try to avoid this, right? So this was step one in my journey in figuring out my algorithm. I needed to try and avoid range markets, and I needed to catch trending markets, right? And for trending markets, I don't necessarily need to get the bottom, so I don't need to enter a trade all like right at the bottom here, and I don't need to exit the trade right at the top. I just want to catch some of the move, right? The meat. I want to catch the meat of the move, or get some meat off the bone, right? So you know, and that was me, right? Some people love to try and catch the bottoms and exit at the top, and some people love ranging markets, and some people, as I said before, some people love the lower time frames. For me, 4-hour time frame, daily time frame, hourly time frame, those are just fine for me, right? And you know, I would love to just catch this move from around this area here and just ride it till, you know, anywhere around here, right? And that and avoid this, right? So that to me would have been perfect. Now if I got a trade anywhere here, I'd be very happy and exit somewhere around here. So that was what I wanted to focus on, right? So I needed to identify when the market was trending versus when it was ranging. And one of the very, very popular ways to do that is by using a moving average, right? So let's look at the exponential moving average. I'll just add 2 of these, and you'll see why in a bit. Right, so I just added 2 exponential moving averages, right? I'll just hide one for now and just focus on this one, right? So if you don't know what a moving average is, basically what it is that it looks at a particular period of time. So let's say we were to look at, I think, let me just check. I think it starts with 9. This one starts with 9. Okay, length 9. Okay. So basically all that says, it looks at 9 candles. So 1, 2, 3, 4, 5, 6, 7, 8, 9. All right. So it will look at 9 candles of the past. In this case, it's looking at the close of those candles. So wherever price closed, right? So source close, it'll look at the close of those candles, and then all it does is plots an average. Actually, you know what? Let me make it a little bit bigger so you can see it. A little bit brighter. Okay, cool. All right. So all it does, it looks at those 9 candles back, looks at the close price, and then plots an average, a weighted average, based on those close prices, right? I can't remember exactly how the exponential is calculated, but you know, you could go off and do that research on your own. But that's all it does, right? It tracks the close price of the candles defined by whatever period you enter, right? So let me just slow this one down a little bit so it looks back at, I don't know, 30 candles, right? Okay, so with the 30 period exponential moving average, what you could see here is that if price is above the 30 period, it's considered to be in an uptrend or moving up, and if price is beneath the 30 period moving average, then it's considered to be in a downtrend, right? I just picked the 30, but you can pick whatever moving average you like. I just like the 30 because it kind of worked for me, right? So here you could see below the 30 it's moving down, above the 30 it's moving up, right? And then what was very interesting is that you could see here, anytime the moving average is moving between price, you could kind of see that it's ranging, right? So I found that to be very cool. So in researching moving averages, I can't remember exactly where I found this trick from, but I'll share it with you today, right? So what I found out, or a trick that I found, was using 2 moving averages, right? And instead of looking at the close price, you assign one moving average to the high right? So instead of looking at the close price, it will look at the absolute highs of the price, right? For 30 candles in this instance. And then I'll just show this moving average. And then this moving average, we'll change this to 30 as well. We'll make this one red so we could see it a little bit better and differentiate. And then instead of looking at the close and instead of looking at the high, instead you'll look at the low, right? And then what you'll see here is that the moving averages forms this sort of channel, right? It forms like this kind of tube looking channel that follows along with price, right? And the trick that I learned, well, that was the trick, right? But the trick that I learned was that anytime price is above the both moving averages, then it's considered to be in an uptrend. If it's below the both moving averages, it's considered to be in a downtrend. And this is the trick. If it's in between the moving averages, then it's considered to be in a range. So you can see quite clearly here, price is in a range. The tube is clear, like the channel is clear. The price is trending, right? Here you can see price is in a range. The channel's clear, price is trending. Range, clear, trending. Yeah. So when I saw that, I was like, man, I discovered gold, right? But you know, I found this to be very cool, and this was in my algorithm for a very long time, right? So I would only take buy positions when price is above it and sell positions when price is below it, right? And avoid trading when price is in between. So that was kind of cool, right? And I guess the theory behind it is that if you track the high price, in this case here is the blue line, right? If you look at if price is above the average of the high prices for the last 30 candles or whatever amount of candles you define, then it's kind of saying, well, price is currently above it, so then maybe the chances are it will continue above it, right? And then you'll look here and say, well, okay, if price is then beneath the low of the averages of the last how much of a candles, in this case 30, then you know, chances are it might continue lower, right? Which is what we see here. And then if price is kind of in between the high and the low, then there's indecision, right? There's no clear direction as to where price is, right? Yes, you'll get some breakthroughs here and it didn't continue lower, and this year you'd get a breakthrough higher and it didn't really continue higher, but you get the general concept, right? So how I would use this for my trading was as I described earlier, right? What I would do is I would look for a break of this. I think the guy who I picked it up from, I can't remember his name or where I got it, but he referred to it as a price action channel, right? So I'll just refer to it as that. So I would say what I would do is I would look for a break. So I would look for the candles or price to break through and close above the moving average, and when it does, then I'll take a long position. And if price breaks and closes beneath the lower moving average, then I'll take a short position. And how I would place my risk was that on the break and the close, I would either look to put my stops beneath the channel, right? So directly beneath here, or I would look back at a few candles and just kind of decide, well, where in this is a decent area, right? And like for this instance, I would define like this candle to be a decent area, but you know, that introduces subjectivity. So the way that so anyway, before I get to that, right? So that's how I started placing my risk. And then what I would say is that I would only exit the trade if price closed beneath the low, right? So in this instance, I would exit up here, right? So that would have been my trade here, right? Which would have been a very, very decent trade. And yes, for this specific example, I'm obviously cherry picking because I need to basically show how it would work, right? So that would have been the trade, right? So so I did that for a while, and then I've figured out that there's this indicator called the ATR, right? So ATR, and the ATR, all the ATR does, let me change this so you can see it. All the ATR does, you could ignore the line, right? All you focus on is these numbers here, right? So all that says is how many pips or points does a particular candle move, right? So what it looks at, it's called the average true range. So it looks at a period of, I think it's 14 candles. 14 candles, yeah. Okay. So it looks back at a period of 14 candles and calculates the average true range, like the average movement of those 14 candles, and then plots it as an average, right? So in this case, if we were to hover this particular candle here, right, it says 22.8. So in this case, my stop loss would have been 2 times ATR, which would be 44, right? So I would have entered here, and then I would count 44 pips, which would have been just about here, right? So that would have been my stop loss, and then I would target, I would only close the trade off if it broke and closed here, right? So same as before. So then that kind of, once I figured the ATR stuff out, right, and I just multiplied it by 2, because it seemed, if the candles traveled more than 2 times this range, you kind of figured, well, okay, you no longer want to be in that trade, right? If it traveled 2 times the range in the opposite direction. So I just kind of used 2 ATR as my stop loss calculation, right? And then that removes any subjectivity from deciding where to put your stop loss, right? So that's where the ATR came in for me, right? But this by itself, just using this as the trend direction, wasn't good enough for me, because as I said, right, you get a lot of signals here where it broke but it didn't really go any further. Then you get this signal here where it broke and it doesn't go any higher. Again, it broke, yes, it goes lower, that might have been a small winner, but still I wouldn't want to really have been in that trade, right? So what I figured out, again through doing some research, is that the best thing to do is to look for a trade filter. And one of the best trade filters that I found is it's not my trade filter today, but it still works really, really good. It's called let me see, right, it's called the Fisher transform, right? It looks very confusing at the start, but I'll show you how I use it, right? So let's look at the settings. I'm gonna get rid of the 1.5, 0.75, minus 0.75, and minus 1.5, right? So what we left, actually, I'll just change the colors a little bit so we can keep the color but make it bigger. Okay, so we've got the blue line, and then we'll change the orange to yellow and make the yellow bigger. Okay. All right, so the way this works is that all it is 2 moving averages, right? And basically how people would use this, they would say if the blue line is above the yellow line, then it's considered to be in an uptrend. If the yellow line is above the blue line, then it's considered to be in a downtrend, right? That's how some traders would use it. I don't use it like that, because as you can see here, you'll get a ton of false signals, right? Because these things just keep crossing each other, right? So in actuality, I'll get rid of the trigger. So all we're looking at is the Fisher, right? And then the way that I use the Fisher, sorry, actually, you know what? Another way that people use the this Fisher transform is that they would say, okay, well, if we don't look at the crosses, then we'll look at whenever the blue and the yellow line crosses above the 0 line, and they'll consider that a buy entry. And if it crosses beneath the 0 line, then they'll consider that a sell entry. But again, it kind of crosses. I mean, you could play with the settings on these things to slow it down and speed it up, but just on its basic settings alone, you could see you'd get quite a few false signals, right? Because this thing just keeps bouncing up, bouncing down. So what I used it for, I'll just get rid of the yellow because the fissure is the only thing I'm interested in, right? What I used it for is a trade filter, and the way I'd use it as a trade filter is I would say, if I get a break and a close above my price action channel and the fissure is above 0, therefore considered to be in an uptrend, then it's okay for me to trade, right? So it's okay for me to take a trade. And then if it crossed beneath, so in this case it crossed beneath here, right? And then you look down, you say, is the fissure beneath the 0 line? Then it's considered to be in a downtrend. Then cool. That would be me taking a short position on this candle here, right? And that's how I would use it as a trade filter. Over here, you would see that it would save you from this trade here, because this would have been a sell signal, right? But the blue line is still above the 0 line, right? So that wouldn't have been a sell. Then you look here, this would have been another signal, a signal to buy, but then you look beneath and the fissure is still beneath 0, so therefore that wouldn't have been a buy, right? Because it needs to be above 0, right? So you can kind of see here that, you know, this in itself saved you from quite a few bad trades, right? So, you know, yeah, actually, sorry, this is actually a sell signal. This would have been a buy signal. Yeah, so this would have been a buy signal here. It saved you from it. This would have been a sell signal. It saved you from that one too. So yeah, it did its job all throughout this little range here. So anyway, you get the idea. So that's how I use the trade filter, right? And there you have it, right? So that would be a very basic trading algorithm. And that by itself alone may actually be a decent algorithm, right? These were two things that I used for a while in my trading, and they worked pretty good. I did use it with some additional confluence, but you know, we could probably get into that in another video. So I think the next step from here is probably to go and test this for a little while. So in the next video, I'll probably do some testing on this and see how it performs. See if we actually get some decent trades, if it filters out some bad trades, and then yeah, probably build up on it, right? So, you know, I think this would be a pretty decent place to start, and yeah, see how we go from here. Anyway, thank you for watching. Obviously, if you made it this far, thank you very much. Feel free to subscribe if you're not subscribed. Obviously, if you like what you see, leave a like. If you didn't like it, leave a dislike. And you know, if you found any of this useful at all, just, you know, feel free to pass on the video to anyone that you believe it might be able to help. I mean, obviously, as I mentioned, I'm not a trading master or algorithm master, indicator master, anything like that. I just learned a lot over the last year, and I found what I learned very useful. So if I can pass it on to anybody else, or pass them on to the people that helped me, I'm happy to do so. So anyway, thank you for watching again, and you know, I'll see you in the next video.